Good morning and welcome to the Office of Tax Appeals. My name is Judge Long, and this hearing is for the appeal of Investors Ally Corp. Before we begin, I want to inform you all that we are currently live streaming our hearing. This hearing will be electronically transcribed, so to ensure we have an accurate record, we ask each person speaks one at a time and avoid speaking over one another. Also, please speak clearly and loudly, and when needed, I or another panel member will interject to ensure proper transcription. As a reminder, the Office of Tax Appeals is not a court, but is an independent appeals body staffed by subject matter experts independent of any tax agency. While OTA is not a court, we must nevertheless follow certain guidelines to ensure we establish a proper record on which a decision is based, and that we conduct an orderly hearing. To that end, we ask that each party have the opportunity to be heard, so please wait for your turn to present your side. With that, are there any questions about anything I just said before we go on the record? All right, I'm seeing shaking heads. With that, if we're ready to proceed, panel members? All right. With that, we are going on the record. This is the appeal of Investors Ally Corp., OTA case number 240215306. The date is January 15th, 2026, and the time is 9:36 a.m. This hearing is being held electronically with the agreement of the parties. I am Judge Long. I will be the lead judge for purposes of conducting this hearing. My co-panelists, Judge Clutter and Judge Turner, and I are equal participants in deliberating and determining the outcome of this appeal. I'm going to ask the parties to please identify themselves and who they represent, starting with the Franchise Tax Board.
Hello, good morning. My name is Noel Garcia Rosenblum, representing Respondent Franchise Tax Board.
Good morning, Brad Catino, also representing Franchise Tax Board.
All right, and then Appellant's Counsel.
Good morning. My name is Cassandra Tucksher, and I represent Appellant Investors Ally.
Mr. Einstein, I believe you're muted.
Sorry about that. My name is Lance Einstein, and I also represent Appellant Investor Ally Corporation.
All right, thank you. As stated in the minutes and orders, the issues to be decided in this appeal are, first, whether appellant has established a basis to abate the late payment penalty, and two, whether appellant has established a basis to abate the underpayment of the estimated tax penalty. FTB has submitted Exhibits A through K prior to the pre-hearing conference that was held in this matter. Appellants did not object to the admission of these exhibits, therefore, Exhibits A through K are now admitted into evidence. At the pre-hearing conference, the parties stated that they had no further evidence to submit. I'd like to confirm that neither party has any new evidence to submit. FTB, any new evidence?
No new evidence.
All right, and appellant, any new evidence?
No new evidence.
All right, thank you. At the pre-hearing conference, the parties stated that they did not intend to call witnesses. I just want to confirm that's still correct, appellant counsel?
That's correct. That's correct.
Thank you. And Franchise Tax Board, no witnesses?
That's correct.
All right, thank you. With that, we are going to begin appellant's presentation. You have 10 minutes for your presentation and may begin whenever you are ready.
Perfect. Thank you. So as you mentioned previously, the issue at hand is whether the appellant has established reasonable cause for the abatement of the late payment and underpayment penalties for tax year 2021. As an initial matter, I just wanted to point out that this relates to pass-through entity taxation, which for the year at issue was an election available for the first time. So with that comes some inevitable road bumps, as I'm sure we can all imagine. In this case, the appellant made the pass-through entity tax election for the first time, of course, on its 2021 income tax return, but mistakenly paid the tax due under the sole shareholder's individual income tax account rather than under the appellant business account. As a sole shareholder for appellant, this individual is known in these proceedings as the appellant owner. our contention is that there was reasonable cause because this was an honest mistake, one that even an ordinarily intelligent individual exercising ordinary business care and prudence could make. And that given the specific circumstances of this case, the California FTB was in no way harmed by the honest mistake, because at all times the FTB had possession of the funds due from the appellant by the applicable due date. From a factual standpoint, I'd like to address the appellant and the appellant owner's tax payments for 2021. As outlined in Exhibit A, appellant's 2021 tax return, the total taxes due for 2021, including the pass-through entity taxes, were $909,728. As outlined in Exhibit K, the total tax due on appellant owner's 2021 individual income tax return was $392,514. The total amount paid to the California FTB by appellant owner prior to March 15, 2022, which was the original due date of the appellant's income tax return, was $1,068,640, according to the payment ledger known as Exhibit K. This means that the appellant owner timely paid to the California FTB the sum total of taxes owed for his business, the appellant. He just mistakenly paid these amounts under his individual account instead of the business account. This mistake was not realized until the appellant's 2021 income tax return was finalized for filing in September of 2022. When the appellant owner became aware of this issue, he paid the taxes reflected on the appellant's tax return for a second time, with the return filing on September 12th, 2022, as reflected on Exhibit B. Based on the FTB's opening brief, this second payment could have been avoided had the appellant owner contacted the FTB and had the payments under his individual account moved over to the business account prior to the return filing. However, just because this option was available does not mean that a reasonably prudent or intelligent person would know that the option is available. Transferring payments from one tax ID to another or from a business account to a personal account or vice versa is not an option that's available by the IRS or any of the other state tax agencies that I have had the opportunity to work with as a tax professional. So therefore, I would not expect a business owner with less professional experience than myself to know this information either. Because the appellant owner was not aware that simply moving the previous payments was an option, he did the objectively next reasonable thing that he could, and he just paid the taxes again, trusting that the issue would be worked out and that he would ultimately be refunded the overpayment. When the appellant owner filed his individual income tax return in October 2022, the previous overpayments were ultimately refunded to him in the amount of $900,608.52 as reflected on Exhibit K. The FTB's opening brief, states that the appellant owner benefited from having the personal income tax return in that amount as a result of his error. I think this statement implies that the appellant owner somehow benefited from his mistake by receiving such a large refund. So I just wanted to point out that I don't think benefit is the appropriate terminology there, because the appellant owner was merely refunded the overpayment of the taxes. Additionally, the FTB stated in its opening brief that by the time, respondent advised appellant of the amount due on the account, the appellant owner had control over the refund from his inadvertent payment to his personal account. I'm really not sure if this statement is based on a misunderstanding, because by the time respondent advised appellant owner of the amount due, the tax liability for appellant had already been paid. And the amount due was simply the penalty assessment that's the subject of this appeal today. So to conclude, neither the appellant nor the appellant owner benefited from the mistake. The California FTB was not harmed because it was in possession of the total amount of taxes due by the applicable due date. And because the appellant owner clearly acted with the utmost care and responsibility to his tax obligations, this wasn't an effort to avoid paying taxes. He paid the taxes for a second time. We believe that we have established reasonable cause for the penalties to be waived in this case. Thank you.
Thank you. With that, I'm going to turn to my co-panelists and see if we have any questions for Ms. Tucksher about her presentation. Judge Clutter, do you have any questions?
This is Judge Clutter. I have no questions at this time. Thank you.
Thank you. Judge Turner, do you have any questions?
And not at this time, thanks.
All right. I also do not have any questions at this time. With that, I'm going to turn to Franchise Tax Board presentation. Franchise Tax Board, you have 10 minutes and may begin when you're ready.
Thank you. Good morning. My name is Noel Garcia Rosenblum, and I, along with my co-counsel Bradley Coutinho, represent Respondent Franchise Tax Board in this matter. There are two issues at appeal today. First, whether the appellant has demonstrated reasonable cause to abate the late payment penalty imposed during the 2021 taxable year. And second, whether the appellant has demonstrated any basis to abate the underpayment of estimated tax penalty imposed during the same year. Respondent received the appellant's California tax return on September 12th, 2022, reporting a total tax of $909,728. Respondent had previously received 3 timely payments in the total amount of $4,500 from the appellant for the year at issue. However, a payment was received with the appellant's return, satisfying its outstanding tax liability. Accordingly, because appellant failed to pay the reported tax due by the payment deadline of March 15th, 2022, respondent imposed a late payment penalty. Additionally, respondent imposed an estimated tax penalty because the appellant failed to make sufficient estimated tax payments during the 2021 taxable year. The appellant paid the penalties in full and filed a claim for refund, contending that the late payment penalty should be waived due to reasonable cause. In its claim, the appellant argued that its owner inadvertently paid the appellant's corporate tax to his own personal account via an estimated payment of $1 million on January 15th, 2022. FTB reviewed this claim and denied it in full. The appellant subsequently filed this appeal. California law provides that a late payment penalty is imposed when a taxpayer fails to pay the tax reported on its tax return on or before the due date of the return. In this appeal, the appellant's tax return was due on March 15th, 2022. As the appellant's reported tax liability was not paid in full by this date, respondent imposed a late payment penalty. The appellant does not contest the respondent's imposition or calculation of the late payment penalty, but rather contends that it is established reasonable cause to abate the penalty. A taxpayer can establish reasonable cause by showing that a taxpayer acted as an ordinarily intelligent and prudent business person under similar circumstances, and that the failure to meet its payment obligations occurred despite the exercise of ordinary business care and prudence. The taxpayer bears the burden of proof to show that reasonable cause exists to support the abatement of the late payment penalty. The appellant argues that its shareholder inadvertently paid its pass-through entity elective tax, or PTE tax, to his personal account, resulting in an overpayment when the shareholder filed his individual return in October of 2022. Furthermore, the appellant mistakenly believed that this overpayment would be applied to the appellant's corporate tax balance due for the 2021 taxable year. Excuse me. It is well settled that a corporation and its shareholders are separate entities for income tax purposes, including with respect to their tax payment obligations. Respondents' forms and instructions were clear, indicating that the PTE tax for the 2021 tax year was to be paid at the entity level along with his corporate income tax, on or before the due date of the entity's original return. Although the appellant may have believed that it satisfied its tax obligations, neither ignorance of the law nor an unintentional oversight by itself constitute reasonable cause. Lastly, the appellant's claim that its shareholder did not receive a benefit from the overpayment and corresponding refund is misguided. Respondent notes that the shareholder received interest on the overpayment in the amount of $15,828.52, which was included in his refund. Furthermore, the January 15th estimated tax payment was applied to the shareholder's own required estimated tax payments, reducing his self-assessed estimated tax penalty. Therefore, the appellant's shareholder not only benefited from the payment by reducing a penalty he would have incurred had the payment not been applied to his personal account, but he also received interest on the overpayment when he received his refund in November of 2022. Therefore, the appellant has not established reasonable cause or any other basis to abate the late payment penalty, and this penalty should be sustained. In regard to the second issue at appeal, every corporation subject to the franchise or income tax is required to pay an estimated amount of tax each year. The failure to pay the required estimated tax will subject the taxpayer to an underpayment of estimated tax penalty. The imposition of the estimated tax penalty is mandatory, and the penalty cannot be abated on the grounds that the failure to pay was due to reasonable cause. Here, the appellant does not appear to contest the imposition or calculation of the estimated tax penalty. Additionally, the appellant's argument relating to the inadvertent payment applied to the appellant's shareholder's personal account does not constitute a basis to abate the estimated tax penalty. In conclusion, the appellant has not established reasonable cause for the abatement of the late payment penalty and has not established any basis for relief from the estimated tax penalty. Accordingly, respondent requests that its position be sustained. I'm happy to answer any questions the panel may have. Thank you.
Thank you. I'm going to turn to my co-panelists to see if we have any questions. Judge Clutter, do you have any questions?
This is Judge Clutter, no questions. Just want to thank the parties for the presentations.
Thank you, Judge Turner.
None, thank you.
All right, with that, let's see. Appellant's counsel, Ms. Tucksher, would you like to make a final statement? You have 5 minutes and can proceed whenever you're ready.
Yes, thank you. I wanted to clarify something that counsel for the FTB mentioned. The appellant owner was not anticipating that his overpayment on his individual account, that refund from that overpayment, be used to pay his business taxes, the appellant's taxes. So I just wanted to clarify the timeline there. The appellant owner filed his 2021 individual tax return in October of 2022 and received the refund for the overpayment in November of 2022. He had already paid in for the second time the taxes owed for appellant at the entity level in September of 2022. So that was already, all the taxes were paid by the time he filed his individual return claiming that overpayment. So I just wanted to offer that point of clarification there. And just to sum up and reiterate that this really was an honest mistake and a misunderstanding based on a fairly complex tax regime. And, the appellant owner sought the guidance and advice from professional tax return preparers. And, despite that, there was this honest mistake where he paid the taxes under appellant's account or under his account rather than appellant's business account. And so at all times, the California FTB had possession of the full amount of taxes owed by the March 15th deadline. And so, he truly acted as a reasonably prudent business owner would when he realized this mistake and paid the taxes for a second time in September of 22 when the mistake was realized. In lieu of, failing to pay the taxes again, waiting to see what would happen. I mean, he immediately rectified the situation and paid the taxes for a second time. Lance, did you have anything that you wanted to add with our remaining time?
I'd like to point out also the benefit that respondent mentioned, as Casey pointed out, that the payment from the corporation was already made by the time he got the refund back. But there was also a mention of interest that the appellant owner would have received as a benefit, based on the prior payment. I think that's countered by the fact that the the appellant, the company, actually paid interest. So, interest got potentially refunded on the individual side, but it was actually paid on the corporate side. So that's a net zero, essentially. And so there was a net zero benefit either way. If anything, there would have been a slight benefit, I believe, towards um, the California Franchise Tax Board or the state of California, because they would have had the money longer than the taxpayer otherwise would have had. So I guess the point being is, I think we've clarified that there, unless I'm mistaken with my math, there was no benefit to the taxpayer, either on the individual side or the corporate side. And if anything, there would have been a slight interest benefit to the state of California.
All right, thank you. Does that conclude your presentation?
That does. Thank you very much.
Yes, thank you.
All right, I'm going to ask a couple questions. First, Ms. Tucksher, FTB was saying that there's no reasonable cause exception to the underpayment of the estimated tax penalty. Would you like to respond to that?
I don't have a response to that.
All right, thank you. And then I also want to confirm my understanding. Your argument seems to be that the appellant owner sought advice from tax preparers, from a tax professional. Um, can you give me more, do you have anything you would like to add about what advice was sought and the nature of the exact mistake?
So the appellant owner utilizes the service of professional tax preparers to prepare both his individual income tax returns and those of his business. And so the pass-through entity tax election, it was available for the first time in 2021. And so what I meant by that statement is that, the option to make that election was discussed with his tax preparer, and the payments that were necessary. Where the mistake was and the misunderstanding on their part was that the taxes were paid in under the individual account as opposed to the business account, when those payments were made in 2021 and 2022.
To clarify, was the payment being made on the wrong account, was that a mistake by the professional preparer or by appellant owner?
By
And
appellant owner.
and Kate and Casey, I can clarify some things
Okay.
because I have some more background at the beginning. So back in back when the PTE was made effective, what would happen is, it's the election's made upon the filing of the tax return. So just an average taxpayer, anybody would, proceed as normal. You know, if it's on the individual side, they're making estimated payments on the individual side. The taxpayer's CPA in this case, who's with a large regional CPA firm, um, worked with this taxpayer for a long time, would advise on the estimated tax payments. Well, what happens is when the corporate return is ready to be filed, since this was the first year that the PT election could be made. It gets made. Well, all those payments, the taxpayer's advisor, advises, hey, you can do this election based on the new law. So we're going to make the election. Um, all these payments on the individual side, then the liability gets shifted from, the left hand to the right hand. So from the individual to the corporation. So it's really semantics and a timing thing, or not a timing thing, but a technicality where those payments that otherwise or were made on the individual side would have otherwise been made on the corporate side. But you don't have the benefit of hindsight at the time because it's a new law. So the taxpayers, to get more specifically to your question, the taxpayers CPA advised them regarding the PTA election, what needed to be done. And then when the return was filed, there was an overpayment. There was an underpayment on the corporate side and an overpayment on the individual side. The CPA, and I think there was the original abatement request was made by the CPA and stated in there that the taxpayer, what happened, the state of California had the money the whole time. It was just under the wrong taxpayer, as Casey or Cassandra pointed out, that um, the taxpayer simply didn't know that they could move a payment from one ID number to another ID number. And that's not unusual because I've been doing this for over 18 years. All I do is practice with the IRS, various state revenue agencies, and the IRS does not allow you to move payments from bucket A to bucket B. So it wouldn't have, the CPA would not have known to advise the taxpayer, oh, all you need to do is, and quite frankly, I'm maybe going on a slight tangent to your question, but quite frankly, the California Franchise Tax Board has said if you simply would have moved that payment from the individual ID number to the corporate ID number, we wouldn't be having this conversation. I can tell you as a practitioner, and certainly as the taxpayer, they would have not known to do that. And or the CPA, the taxpayer CPA who originally filed the abatement request, would not have known to do that. Or I think you could at least say a reasonably prudent person would not have known to do that with business experience. And so um, the fact that it's just simply all, admitted that all you had to do was move this and that it wasn't known and it was, a very, reasonable position not to have known, we wouldn't be sitting here today and we wouldn't have spent 2 years, going back and forth over a penalty that has been assessed and paid for which the state of California had the money the whole time. So to answer your question, it's kind of overarching. The CPA was running the show. Underneath it was the taxpayer, and neither one of them, knew that they could have done this. The CPA advised the taxpayer to the best of his ability, and neither of them knew that they simply could have moved a payment and avoided all this. So that was a long answer to your maybe short question.
All right, thank you. With that, I am going to turn to my co-panelists to see if we have any final questions for either party. I'll begin with Judge Clutter.
This is Judge Clutter, no questions.
Thank you. Judge Turner?
We have a copy of the CPA letter that became the basis of the abatement request initially. Is it in the record?
Mm-hmm. It is, I believe.
Yes, I do believe it's also in the exhibits.
Perfect. Thank you. No further questions.
All right, with that, this case is submitted on January 15th, 2026. The record is now closed. I want to thank everyone for participating today. The judges will meet and deliberate and decide your case. We will issue a written opinion within 100 days from today. Today's hearing in the appeal of Investors Ally Corp is now concluded. OTA is now in recess, and the next appeal